There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We want to teach you the processes.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now.
World markets have red arrows as the sell-off of gold and commodities picks up. Investors wonder, could this foreshadow weakness in the overall market? Get ready for 2 busy weeks of earnings. I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are down this morning, and markets took in stride the first day of a commodities sell-off last Friday, and now as a sell-off sort of intensifies, Scott, do you think markets can continue to take it in stride?
Well, Friday was the break of the commodities macro trends, and we were down a lot. And the question was, how would we handle it? So maybe the market was in a little denial on Friday and just took it in stride. But overall, as that slide intensifies, there are some more rumblings that it could be a sign that demand around the world is just not there, that it's a precursor for other sectors going to the downside. But overall, Friday the market took it in stride, and then today we're going to have to judge whether or not it continues.
So what will be the levels you're watching in the S&P?
Well, it seems like we're opening below Friday's low already in the S&P. So if we take a look at the chart, you will see that we were extended from the 8-day and the 21-day moving average, but we're well above this trend line that started all the way back from November. So what I would suggest or think about is, how do we handle this prior breakout? We've always tested these prior breakout zones. So right here you have about 1573-ish to 1576, which is also the 8-day. So, from the high of 1597 to here, almost 20 handles or so. So that would be a spot that if you overlaid some of your shorts in the spiders, perhaps take some off and get back to just a normal hedge. If we were to hold this, I would think that would be very, very impressive. If we don't hold this, I still think we could hit the 21-day, which is this prior breakout. If you remember that 1562 area, that would be a level that I think most guys like myself that have portfolio approach will be watching to figure out if we need to start trading from a net short position. So this is level support 1, level support 2. But overall, you could be short things out there, long things out there. All stocks haven't been created equal. Just a matter of everyone wants the headline of market pullback or correction so they could be perceived right, but that doesn't help their P&L.
Right. So how does that compare then to what levels you're watching in the Dow?
It's very similar. Dow is just a little extended. It took also the market down and move in stride. You go here to the INDU, which is the Dow Jones Industrials, and you'll see everyone's all up in arms, and look, we're not even 0.5% from the highs here. Here's your 8-day, here's your 21-day. So if we do pull back, guys in the Dow would probably be watching this, 14,000, just say 680 area. So overall, it's been a really strong trend. And, I ultimately think the commodity sell-off is good for the markets. Everyone's pointed to 2008 saying, oh, they were the first ones to sell off before the market got crushed. I don't think that's going to happen. I think if we do pull back, 2 to 5%, most people want that. The question is when it happens, everyone gets scared and it's like, be careful what you wish for. But at this point, there are a lot of strong stocks out there. We're going to head into earnings season, and I do think that there's opportunities if people embrace even in the commodity arena.
That is the concern right now. There is talk that some people are concerned that this would be a precursor to a sell-off in the broader market. So what would be the new levels that you're watching in gold? Okay,
so this is what we've been talking about on gold. Gold has been in a decade-long bull market. And in March, it broke its intermediate area. So I know there are a lot of guys out there that invest in gold over the long term. They have it also as a hedge on their portfolio. But gold's been acting weaker. And everyone, there's no way to window dress that, so to speak. So, the first situation or the first spot for an adjustment was around 161. That was a spot to get rid of some of your overlay if you were long gold. Some guys even look to get short there. And then on Friday, we started talking, which we've talked about before, that 148.5 to 150 or 149, that if we were to close below that or get a 60-minute close below that, if you're a macro investor in gold, you gotta sell some, get out of the way. And then some traders who just trade intraday or use 1 to 3 day methods, it was a great short entry. So if you look here at the chart of GLD, you will see this was that 161 intermediate level. Okay, here is your high that came into place, lower high, another lower high, or just say you could say double top here. then this was a very tight spot. If you guys remember, we were looking at it right there and it gapped below. I was actually looking to be a little long here and I stopped myself out. Boy, was I happy that I didn't get stubborn or have an opinion. I was like, okay, I'll take a $1, $2 loss, small percentage, but get out of the way. Then we came down and we held macro support, bounced off it, couldn't get any traction, came back again, lower high, and then we opened below, stayed below it, and boom. So now the question is, what do you do? Okay, if you look at the level here, this is why it was macro support. It held for a long period of time. That gives way, people get out of the way. So we talked about 135 to 140. We now hit as low as 135 this morning. That's this little peak or little trough right here, 135.80. I do think it's going to try and hold here. Okay, so at this point, if you are an intermediate trader and you were hoping to get this level, congratulations. It happened a lot sooner than you would have thought. I don't think anyone thought that we'd be at this level in 2 days, but you don't have to know if you make the right adjustment when a level breaks. So I would cover some. Some guys might even try and look tactically long. If you do so a level versus a level, because these moves can be dramatic. But ultimately, I do think that this big channel, so to speak, that was just say if you want to do it roughly from 148 to 173, about 25 points, takes you all the way down to about 123 to 127, which is bigger support over here. And then you take a longer term look at it just real quickly so you can see it, how the picture looks this way too. This is the support. That is what broke. It's below the 200-day. Here is where we are now. Good area to cover some. Doesn't mean it's a long, but ultimately I think it can get down to this area, and then the longer term trend line comes in down there.
So how have the gold miners been impacted by the sell-off in gold, say the GDX?
They've been locked in these downtrends for even longer than I think gold. Okay, and a lot of times everyone's like, oh, red dog reversal on the miners, red dog reversal on the miners. All right, they've been trades that have led to nothing. And if you look where the GDX closed, they too have been just weaker. First, let's go to the daily chart so you can see, this is a very strong trend. First of all, if you want to look back here, here's a peak, lower high, small double top, then rallied back up, made a lower high, and then look at this trend, boom, all year. Everyone's been fighting the same way they've been fighting the S&P to the upside. They're trying to buy the miners with opinions, and they've given you no reason why. You had a small little stop right here that was somewhat tradable. I think I tried to trade it, but look at this choppy mess, and then once it gave way right here, okay, that was your out. So, and you have to know when you're trading a weak sector, you better be on your toes. So PS, on Friday it opened up in new lows. It's opening down again, into crazy trenches like that. It's always hard to initiate a short, but I don't see any reason why to truly own them. Okay, and here is another level of support in the miners right there, and then really, this could take you all the way down to 15 or so. So I would just be very careful. It's been locked in downtrends, and they're so hard to reverse.
Well, silver, obviously a very similar case to gold. Just let us know what levels you'll be watching there now.
Silver I haven't even really been focusing on because there's been almost no bounces there, and it's been following gold. If you look here at silver, SLV, this is what a lot of guys trade, and if they don't trade the futures, this is when this intermediate area broke. I remember looking for it to break this downtrend right around here, and it broke to the downside. Okay, that's why you don't have to think about which way it goes. You jump on when it resolves, and this resolved to the downside, closed weak through this support. It's opening at a pivot right here, which is right around the low here. This is like 2270. So maybe you cover some might try and be long it. If you do so, again, a level versus a level. But ultimately, with the velocity of this move to the downside, if it doesn't regroup fast in the metals, which I don't really think it will, you could see a move down to 1950, which is where it broke out from, in 2010. So 1950 looks like where it's going in the SLV.
All right, coming up, we're going to go in the trenches with the banks, which continue their earnings this week. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with the banks following JP Morgan and Wells Fargo's numbers on Friday, which were perceived to be pretty solid, but they didn't actually do that much, Scott. So do you think that we'll see that continue with the other banks reporting this week?
Well, I just think that the banks have had a big run, and typically, for some reason, they don't really act well after earnings, whether they're good, bad, indifferent. They digest a few days, and then they go into, another move. So it'll be key to watch the banks to see which way that goes. Especially when you have the weakness in the commodities, and people want to see if other sectors can continue to be strong, or do we go further down in the broader indices. So if you look at JP Morgan, you will see, really nice trend from November, broke it right around here when it broke below the 21-day. Got some footing right there, rallied up, and then it's in this little inside range here. Okay, earnings are out, so that means the catalyst is out of the way. So the question is, will it stay in this bigger channel, or kind of potentially, help the market to the upside? So here's your defined levels. If it breaks and closes below, just say 49.45, chances are it might trickle its way back down to support. But if they go for the banks today in a sea of red and it goes positive, I think next spot will be if it breaks above 49.60, and that'll help lead to to higher prices. Wells Fargo, same story. I think both were upgraded this morning, so it'll be interesting to see how they take that upgrade.
Yes, Wells Fargo, same story. But the stock did fall 0.8% on Friday and was able to close well off the low. So is that a sign that we'll see it continue to the upside?
I just think this has been more of an investment vehicle, and traders scratch their head because it doesn't really move the way some other banks do. At this point, you look at Wells Fargo, and it did hold this support. It was lower, held it pretty well, still above the 50-day. So watch this as your line in the sand. I'd say, what is this, 36, 60-ish. As long as it holds above that, I think this stays in the game and then builds this channel for hopefully a higher move later this year.
And then headlining earnings today, of course, will be Citigroup reporting before the bell. Expect to report $1.18 a share. The stock has been strong. What are you watching?
Want to see the reaction. Want to see what they come out with, see if it's a strong report, see if it is a strong report. Can it actually rally on that, which would be helpful for the banks? If it's a weak report, can it gap lower and continue to the downside? So if you look here at Citigroup, I have no position. I'm just going to see how it, how the reaction is to the overall banks. This is major support. Here is the highs. This too, just like most banks. Most banks are smack in the middle of this bigger channel. So, at least you have some points of reference on how to deal with it short term. But on a longer term basis, here's your support, here's your resistance, and let's wait to see what the numbers, how the numbers look and what the reaction to them are.
And then there's Goldman, which has been acting better. Got a nice bounce on April 5th and has reclaimed its 8 and 21-day moving averages and is actually expected to report the highest of its peers.
So again, just like the rest of them, how will it react to it? It had an unbelievable move to start the year, and now you look here at Goldman, you'll see that after breaking this accelerated trend line, it's been somewhat of in corrective mode. Finally triggered a little bit above it, holding higher. This one, will be something we watch, right? Above 150.60, then it can continue to the upside. Let's see if it can start to get in motion there. It's going to have to wait till earnings. So here's your intermediate support, and here's your biggest support. So we'll see what happens here with that report and, react accordingly.
And 2 trading sessions ahead of us before Bank of America reports on Wednesday. We did see it retrace into the weekend. Will we be watching Bank of America?
Same thing. This is something that I've actually chosen that I'm going to sit through, just like an investor, and just trade around it. And if you look at Bank of America, it's had a lot of nice moves to start the year. This 995 was a really nice breakout for a core trade. Then bull flag continued. This is when this small trend line broke to the downside, a spot to take some risk off, made new highs, came back down. This was a spot to maybe try it again. And then here was your, your breakout that didn't really have traction, came back in, held the intermediate area of this channel, and now it's holding higher. I am long Bank of America, and hopefully they make it easy. It triggers above 1240 and gets back to highs. Going into earnings, I'll talk about a bit more of a strategy. Maybe I'll do some kind of call spread with my actual common, so this way at least I know the extra overlay is premium paid versus being in tier 2 or 3 into earnings, which could need another quarter, so to speak. So we'll figure that out later this week there.
Well, a little bit further out on the horizon is AIG, which reports on May 2nd. I know it has a tight flag pattern right now that you're watching. Why should it be on our radar?
Well, it's acting well, and every now and then I'll hear traders say, "Oh, did you see AIG? Did you see AIG?" And I haven't really been focusing on it, but overall, the chart does look good. It did break above a key area right here. It's above the 8-day, holding in there. As long as it stays above 39, it looks good. Then perhaps above 40.68, it can go again. But this stock has been something that's been tradable, and I guess a nice position to have in your portfolio approach. For me, I've been avoiding it. I've been focusing on other banks, but it looks okay.
All right, time for some quick hits, guys. Looks like Microsoft may finally be finding support after its sell-off on Thursday that was tied to bad PC sales. Do you think it is?
Well, I think that people were discounting the PC sales and knew about it, but then they didn't think that all of a sudden Goldman Sachs was going to blast it and put a sell, and then everyone else. So at this point, you do have a lot of work to do. This was your 2-day move. Thank goodness it was really that strong of a 2-day move, so traders were probably able to sell it into what was the target. This was the first target. Then it gapped lower. It's finding support at the 21-day. I think for me, I'm not going to really look at it. If it could all of a sudden start acting better and get towards this gap, 29.20, I'll put some on for a bit of a gap fill to see if there's any kind of dip buyers here or any kind of action.
And 3D printing stocks have been acting really well lately. 3D Systems saw an impressive rally since April 5th, ran into 50 resistance at its 50-day and 100-day, so you think you'll have enough power to break above them.
This group is such an innovative group that traders have been watching it, and there's been there are a few of them, and now recently there have been talks about GE, liking their whole sector, about their 3D printing for manufacturing. So it's that they're becoming more viable. Okay, it's been a great 2-year run for investors. People started talking about them as being fluff stocks, but I do think that it can continue. So far, it's been acting better since, if you look at the chart here, getting above this 30-30, which was my last little strategy. Now it's holding above this prior breakout. The longer it stays above, I would say 34-ish, the more traders like myself will be interested, and then perhaps it can go in motion if it can get above 35.65 to continue. And if you look at XONE, which has been an unbelievable new issue for people, this is why we get excited about new issues in a cunning new sector. This is when it broke above one area for a nice trade, and then here, when it broke above this prior pivot, it continued. So showing you that you could trade this thing, and some people are actually investing in it. I typically like a few months of data before choosing it as an investment vehicle, but right here, it looks like they're not even waiting.
And in casino stocks, WYNN has had 5 big up days. Can momentum continue there?
Well, this one put a bottom in, and you never know where it's going to go on a bottom, and 5 days in a row, which makes it tough. So you look here at WYNN, it just shows you that this group is in the game. Nice reversal at the 200-day, fast and furious. Now it's got to hold above this prior resistance. If it stays above 124, I think it can continue. At this point, I would just, let it digest a little bit.
And then also in casinos, we should mention Las Vegas Sands has been acting better. It's reclaimed all key moving averages. Above what level do you think it could lead us higher?
This one closed on the highs on Friday, and I did get back involved. It's been trading better. There's talk that Sheldon might want to give a one-time dividend and do something to benefit their shareholders, since he owns more than 50% of the company. You look here, I'm going to look at it as it's probably a little red with the market today. Overall, if it wants to clear its prior pivot like its friend WYNN did, this is the spot. First thing it's got to do, though, is get through 56.15 for that to happen. Nice hammer reversal here, and so far it's leading to a sustainable move with commitment.
And we should mention in headlines today, Dish offering to buy Sprint for $25.5 billion. Could this be a big catalyst for Sprint today?
Well, it's up a lot, and for me, it's a little unfortunate. It goes to show you how I broke one of my rules. I focused on this as a really nice buy above 596 for a breakout. If you look at the chart here, it did have a really nice breakout. This is when I think I was in tier 2 or tier 3, and my whole mantra of trim and trail was in. I trimmed some here, and then I was just trailing it. And all of a sudden, I don't know what happened to me on Friday. I got a little bored. And when it broke below the 8-day moving average, I'm like, let me clean up my Sprint. It's just boring me. And PS, it's at $7, so I miss out on a big, nice premium. Hopefully those in the Twitter sphere or around stuck with it, because I didn't tweet saying I'm done with Sprint. I just, just got rid of it, and hopefully others didn't. And if you did so on the VTF, I apologize. That just goes to show you that sometimes I'm the offensive coordinator. I'm calling out the plays, and I just can't be in everything because I'm a little bit stretched all over the board there.
Don't be too hard on yourself. Well, so ahead of the first trading session of a very busy week for earnings, what will you be focusing on today?
I'm just going to focus on those 2 levels in the S&P, right? Can 1573 to 1576 hold? That would be impressive. That's like around the 8-day, and then the 21 days right under it. Going to watch the commodities. I'm not coming in short gold. Okay, there I was again on the sidelines saying, guys, if we break 148.5, we can go run that route down to 135, 140, and that's where we are. I might look to buy it versus a level if I see some type of divergence for a quick trade. Just looking to be cute, no big bets. I think you should be covering, but if you think that macro-wise in a month from now it's going to be at that lower level of 123 to 127 in the GLD, then make sure you stay with some, and then it might just bounce around. You might need more time. And then again, we need to see what happens when Citigroup announces numbers. Does any attention go to the banks? Do the banks start to weaken? If they weaken, do other sectors? And then does that finally lead to a 2 to 5% correction in the broader indices? So a lot to look at. A lot of earnings coming out this week. Just know when your company is reporting, if you're in it. Because a lot of people are like, oh my goodness, I didn't realize it was today. And meanwhile, they thought that they had 2 more days to adjust their positions and get ready for it. So just be prepared. The next 2 weeks are very, very busy.
All right, thanks so much, Scott. Happy trading, everybody. Have a great Monday.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.